All right. Time for a little SSI, Street Savvy Insights. And looking forward to connecting and sharing just some interesting headlines that's going on right now. And of course, paying attention to what's moving the markets. And of course, gold is front and center. And so I want to talk about that and a lot of other things. So it's going to be a good live stream. And so the goal is to do the narrow view in hopes of being able to connect with the community as well as connect with those that might be like-minded, but may not know about the channel. And so I'm looking forward to doing more streaming here on the channel so that we can connect and talk through things, and as well as having the community introduce me to all types of things that might be some good opportunities to speculate in. So, looking forward to connecting. So, for those who are plugged in with me, feel free to let me know where you're watching from in the chat. I like to acknowledge the community, so feel free. Let me know in the chat. Let me know if everything is flowing smoothly. Let me know if you can hear me, and then we're going to plug all right along. And so, um, yeah, gold activity is what's on my mind right now. And so, just looking at the past couple days of activity, we're seeing what I consider to be small tremors of what might end up being some historical uh, daily activities. And so, from $50, we're going might see them $100 days. We might see the 500, $1,000 days. And earlier, just talking about the signs and signals that Weimar Republic perhaps experienced uh, before they hit that hyperinflationary spiral. And so, just looking at graphs and charts, I'd imagine, economic conditions weren't the greatest. And so, Toby, how you doing, man? Appreciate you for joining me. Let me know what you're keeping your eyes on, what opportunities you are looking at, and things of that nature. Looking to connect and learn from you as well. And so, just looking at some gold activity, and just very interesting times, man. It's exciting times for those that are aware and somewhat prepared, according to what we would consider to be preparation. But we never know what and how these markets will play out, and that's why I want to just talk my way through them, try to make sense of things, so that everybody can hopefully be better off having joined us than having not joined us. And ultimately, that's the goal here. So, yeah, let's just jump right in. So, let me make sure I'm flowing. Let me make sure everything's good. And we're going to make the most of this time together. Okay. So, let's not waste any more time. What I want to just jump into right away, gold. Gold is just, the people, that's not the people's money, but it's true, tried and tested for millennia. And here it is now surfacing, and it's going to capture the attention of the masses. And when it does, it's going to be not never it's never too late, but for the average Joe and Jane. Like, I see more headlines talking about, the average person can't afford to do this. The average person, can't afford this. McDonald's is trying to bring back their value meals because they're saying their primary fan base, which happen to be the lower income individuals, the foot traffic is low. And so they're trying to make moves and try to pivot. So everybody's in a different position financially speaking, but as a part of my mantra of just look for opportunities, look for ways to protect and preserve everything you work hard for. And it always points back to gold and silver primarily as your foundation. And then once you've secured somewhat of a decent foundation, then that's when you look towards the speculative opportunities. And that's when we get into the digital asset space. And let me repeat, I am not a Bitcoin maximalist. I I always have mixed feelings on when it comes to Bitcoin maximalist, because it's either one or nothing, and that's not the case. There's more than enough room for a variety of things depending on what your strategy is. And so, just like I say, all dollars are not created equal. You got the paper, you got the digital, you got the physical metals, you have the bonds and treasuries are considered dollars, you got the euro dollars. That's four or five instruments right there. And we don't treat them alike, but they're all lumped under the same basket of being dollar derivatives, just like digital assets. You have Bitcoin, you have Ethereum, you have Monero, you have an assortment. So those three off suit three different needs. You got privacy, you have the Web3 supposedly, and then you have what some consider digital gold, for whatever that's worth. So we're going to talk about that a lot more. But I appreciate people for checking in with me from Turkey. Appreciate you, man. We got Ralph out checking in. We got Bob says Hexagon. Hex. I follow Hex. I'm aware of the movement. I'm aware of the large community there. Once again, to me, I look at it as a penny stock per se, something that's small, large supply, But then again, it's just the model of taking your hex or pulse, or whatever you want to call them, locking them up. And that particular model just doesn't really suit me because it's meant to be something that you buy now and you watch it grow over time and you lock it up to support the network and all that stuff like that. And then you'll be able to withdraw. And in this current environment, I'd rather have access to be able to get in, get out without penalty, without the threat of causing a mad exit of other people wanting to get out as well, therefore dropping the value of what you have. So that's just one of the things. But once again, just not one of those type of guys that really jump in with it. Toby says silver is a great opportunity for those looking to preserve wealth who can't afford gold. 100%, because silver is nowhere near where it's going to end up, just like gold. And that's where, like, I believe gold and silver as wealth preservation vehicles, they too have two unique use cases beyond just wealth preservation. Because when it comes to gold, especially, most people, if you are of a higher net worth individual, meaning that you have weight, like serious weight, tonnage, kilos, large gram blocks, stuff like that, then you're not looking to get out of those no time soon. That's your transition fund. But then again, if you have incremental fractional gold, that can be your, get some stuff done money immediately, i.e., good example. So one gold coin as of now, $3,700. Let me just look at the different weights. I could go look at the weights, but more than likely, you're not going to feel comfortable moving an ounce unless you're moving it for something that is of value to you. But 1/10 or, a quarter of an ounce, you may be able to move those. But in the environment where I think we could be heading, it's going to carry so much purchasing power that you'll be surprised at what you can achieve with that small amount. So my whole point is, it doesn't take a lot of gold to make phenomenal returns and moves in this system. But then again, when it comes to silver is one of the things where we don't know where it's going to end up, but we know it's going to be better than it is today, priced in USD terms. But then again, majority of people who have an ounce of silver, those would be things that you can move right away. And if you got coinage in reference to just the quarters and stuff like that, then you'll move those things no problem. So that'll be more so towards your barter stash, towards your everyday activity stash, whereas in gold is something you're going to hold on to and try to move in the future. So having a strategy, having a plan, is stuff that definitely people want to work out. And Nia says, "Are you AI?" I don't believe so. But the question is, what is AI? I get you though. Attack. Appreciate you, man. Okay. So what I want to get into, I just want to share a couple tabs and whatnot and just talk our way through it, because I plan on doing more of my thoughts and analysis and opinions in reference to just the markets in general. So I've been studying market activity for over a decade now and been positioned as a monetary enthusiast. That's how I kind of coined the phrase, where I interview lots of people to understand and educate. I got literally a what I call a street degree, just because I talk to any and everybody that are movers and shakers in the industry. You name them, I probably talk to them, and have developed a nice rapport with a lot of people that are movers and shakers, from the mining space to the digital asset space, you name it. And so, having taken all those discussions, all that knowledge, put it together, and of course with tons of books, I got books everywhere, you get a nice foundation to stand on, to where the average person is not aware of what money is, nevertheless how to protect and preserve their wealth, because they're focusing on the financial literacy is what we're being told, who to give your money to when you earn it. And that's where we get into the legacy system, and people tend to buy stocks and bonds. And then anything beyond that, is the risk that falls on you. And that's where you should be willing to educate yourself, so that the risk, you're willing to live with when and if it comes to that. So, okay. So let me just get this going here. Let me share some stuff on my screen here. So what I want to share is current activity. So on the screen, as you guys can see, let me get this out the way here so I can talk my way through it. Okay. So reason I thought about this, because literally, this is the what is this? This is a 30-day chart of gold. and I can go a lot more detail, but I just thought for the sake of this little talk here, I want to give you some just paying attention to the trend right now. So the trend in reference to from going down to about 3,300 and then seeing how day by day we're seeing what I would consider to be, let me zoom in here some. Actually, let me go to a different one because it'll be easier. It might be easier. Let me try to zoom in here. So let me just, for the sake of, okay. So as you can see here, 33.13, August 20th. And so literally since this volatile wave that we've been in, this recent candle here just shot straight up. Typical fashion, as you see, based upon what's been developing over here, you have the market opening up in the Western Hemisphere, the bullion bank slamming it. And then throughout the day, it recovers. Bullion bank slam it, then it recovers. So literally, here we are now, and barring me refreshing my screen, we're still trending up, meaning that markets opened up here. They haven't been able to get it down. And of course, it'll probably come down tomorrow. But what's noteworthy is the incremental candles. Like the candles we're seeing, let me zoom in if I can. The candles we're seeing are like $50 candles. Like, I mean, candles that, let me go back here. Shoot. Give me a second. Candles that we're not used to seeing when it comes to gold. Let me zoom in here more if I can, bear with me. So literally, so from this time frame here, these candles, I'm not even a TA guy, but I just realized trends just because when they're consecutive, you have to realize that something is happening. So we're literally having, so it goes from 30, no, this is silver. Shoot. Where did I go? Let me go back here. I got a whole little thing on silver as well, but let me go back here. Bear with me. Just trying to lay out some things we're paying attention to. Okay, so my whole point was these green candles here from 305, and then next thing you know, we trending up here 345. Then we go up here to 379. So from here to here, that's over $50. Then the next one, $50. Then the next one, 50. So literally these small 50 to 100 movements is what has spurred this recent rally of gold going up. And literally we're just, not even in phase one of where this is probably going to end up as things blow through. And that's why I think it's something worth paying attention to, because when you see this type of activity and they're not willingly or actively trying to suppress that price, that lets me know that, behind the scenes, somebody's making a lot of bread, those within the system, and they don't mind it riding up a little bit more. So for those who probably going long, you're probably making some bread, and then you got one or two knuckleheads or people who know some things that might be trying to short this gold activity, assuming or knowing that at some point it's going to go down. But when I saw this, another thing that had me really questioning the timing of everything, it was in reference to a graph that was shared on social media. Let me see if I can find it. Give me 1 second here. And had everything to do with, let me grab it. Give me a second here. Let me try to find it. It had everything to do with, let me bring it on the screen here. So this is the graph that I wanted to highlight. And so when you see right now, this type of activity here also took place back when gold was money in Germany during the Weimar Republic time frame. And I'd imagine, leading up to this point from 1918 all the way to the point where we got to that turning point for gold relative to the paper derivatives of what they call fiat currencies. People were not really focused on it. They noticed some things. Cost of living was probably going up, market volatility, the war and all the things happened within Germany, change of power. Hitler started to do all types of crazy stuff. But people noticed the tightening of their pockets, not much, available currency to do things. And then you look at the idea for them in particular, they could take their Reichsmarks and take them and redeem them for physical gold up until a point. And when I saw this image here, I'm thinking man, I wonder, what was the trigger or what was that turning point where people woke up and realized, like, dang, like, man, let me go ahead and take these notes while I can and try to get some physical gold, because the way things are, happening right now in the streets, the way that people are whispering, I don't want to be left holding these paper IOU nothings. And then all of a sudden, when the masses found out and realized and or saw with their own eyes the exchange rate out of their fiat currency into physical gold, that's when all heck broke loose, I believe. And it didn't take much, I would imagine. It didn't take long and it didn't take much. And I kind of believe that with this gold rush taking place now, internationally speaking, and the fact that the US is so focused on all types of other things, we are experiencing that aha moment where, like, with more commentators, more people trending on social media talking about gold in particular, like, literally, when the Federal Reserve, if they cut next month, the way that, a lot of the Fed board people are saying, we're going to cut next year. Like, I think it was Waller mentioned that, he anticipate a cut next month and then several cuts either before the end of the year or heading into next year. And I'm thinking, like, when they cut, they're cutting for the sake of printing more. So therefore, the currency is going to be chasing finite goods. And you better believe the international community will respond when you have the reserve currency, the stewards of the reserve currency deciding to cut and to begin printing by basically, creating new currency through credit creation. And gold prices at that point could go literally parabolic, and to where we go from $50 days to $100 days to $500 days to $1,000 days. And then at that point, I don't know what to tell you, because we've never witnessed, no one tuned in, no one alive has ever witnessed that type of activity where you see gold going to I consider it to be a danger zone. And let me share with you what I mean. This is the movement I'm talking about, where you have within your country your national currency, which what we call Federal Reserve notes, aka dollars. Literally, people realize that these things don't buy much, literally. And could you imagine getting to the point where, excuse me, a little thirsty there. You get to the point where you get paid on Friday, and literally, as soon as you get your check, you try to swipe your card to go get something, because you like, man, like, come Monday, whatever it is I usually need or do, it's going to cost more. And, like, I really don't think we're going to get to that point, because Donald Trump can't have a presidency if he has an economy that is obviously unstable. But at some point, if we are at this early phase, then could we go to the moon in that capacity? And then, of course, we got everything else. Silver is going to trail. It's going to say Bitcoin's crypto is going to trail, because when the Fed cuts, that is probably what's going to send that through the moon. But then again, I'd imagine there's going to be greater demand for gold and silver than it will be digital assets, because here in the Western Hemisphere, as you've noticed, it's in our politicians' best interest to distract us with digital, because they're afraid of people getting physical. And so they don't want people to run to gold and silver, because that put pressures on the government, literally, because that means the United States Treasury will be forced to address that by actually forcing the United States Mint to produce more gold and more silver coinage. And then that will lead us to these instruments right here, US silver dollars, becoming a hot topic. And so right now, one of these instruments are, I think, like I saw, it's like almost $50 or so. And think about the cost that the government, if they were confronted with the demand of what they would have to go spend in order to get physical silver, further driving up the price, because there's not that much available silver just sitting around waiting to be utilized, especially for coinage. And so between all that, if it was to take place, the government would definitely need some type of distraction. And that's why, everything I'm mentioning is hypothetical situations. But once again, it's better to be positioned early than to wait for things to unravel, then try to go get your weight up. And so that's just a little side note there. Let me know what you guys think. But a couple other things I want to touch on that are also some key points worth mentioning when it comes to just where we're at and where things are heading. So here we have that same chart of the dollar, of the gold price in dollar terms. Here we have the price of a dollar weighted against gold. And as you can see, the higher the fiat price of gold, the lower the Federal Reserve note, aka the dollar, drops. So, excuse me. As I mentioned, there's no ceiling to how high gold can go in fiat terms because there's no floor low enough to where the Federal Reserve note can drop. So, these are some things that are very, very interesting. And we're going to be forced to watch all this unfold in real time. And then you better factor in there's going to be all types of political charade games, charade games played by the politicians. Nobody wants to lose their seat over having to address why, the economy is not doing well. And it's not even talking about the realistic likelihood of an official recession because they are afraid of that word becoming public. But all the indicators are flashing, from the job issues, the revisions of everything that was once stated by the NBR. They are revising them down. You got, you name it. There's so many indicators. I just can't think of them right now, but it's letting us know that they're trying to avoid that. And of course, this administration needs the markets to be juiced. That's why he's begging for a Fed cut. And of course, when they cut, it's going to send everything through the roof. Now, here is something that I want to touch on as far as just a recession narrative, because this factors into your portfolio, I believe. Give me 1 second here. Let me get this on the screen if I can. Okay, so as you can see here, this is from Fortune magazine, and this came out yesterday, but it says UBS gives America a recession checkup and sees a 93% probability from the hard data with a soggy economic ahead. So once again, these words, recession, 93% probability, are not favorable terms that this administration want to hear, because there could be no MAGA. There could be no MAGA. Make America great again if there is a recession. So that's why I'm betting on gold and silver doing extremely well, because this administration will have to pull some strings and or do something that will show the rest of the world that they've lost control and they are in need of some type of emergency measures. And where is capital going to run? It's going to run to safety. So, but just this headline here, recession, I believe that we're going to start hearing more of these terms because the mainstream media, true, they do have a hit out on this administration. So they're going to publish all types of things to drive fear. But then again, if you realize with how the economy is actually performing, you also know not to trust this administration. When he get up and say inflation is at record lows, you're like, no, do you look at the price of electricity, steaks? You look at the meal that you ate last time we went out. Is that going down? No. So once again, these are just some things to pay attention to, because these are the things that will drive up asset prices, and you got to be positioned according to whatever you believe in. And that's where I believe that gold and silver comes into play. And so let's talk a little bit about the crypto space. And so here on the screen, I want to touch on this because from a speculative standpoint, I believe when you are aware of where the system is steering people, it'll be unwise, in my opinion, not to take advantage of the trend. And when everybody named Mother is talking Bitcoin, Ethereum, whether you like it or not, having a position will allow you to reap some of the rewards of the price appreciation as the Federal Reserve note is destroyed, so that you can take those proceeds and then get into the tangible world with things a lot faster than just holding fiat currency. And so here we have over the last year, as you can see here, for Bitcoin to be up 94%, it's not bad. So having a position well before that year, you're not mad at all. And that's why I think for me personally, just dollar cost averaging and puts you in a position where you'll be holding something, because you're holding something in defense against monetary policy and fiscal policy. And so once again, the limited nature of this and the fact that you having free, unlimited marketing from the mainstream media driving people in this direction, these are going to be some things that are worth paying attention to. Now, these are just the core things that people hold, but you have all these other ones here where, depending on your strategy, there can be some good opportunities. And so I personally am aware of maybe 20 of them personally where I've done my own little bit of educational journey, and I see a lot of opportunity just because there's some projects that solves problems within this technical digital world, and those are the ones I know that our government and Wall Street in particular and the financial sector in general will be looking to utilize their services. And of course, you got the Ripples and you got Solana and all the other places where they're trying to really pump those, but then you have the ISO 20222 coins that everybody love as well. So, but yeah, I look at them just from a pure speculation standpoint. I don't preach it. I don't, tell people what to do, what to get. I just say, hey, look at all your opportunities, because there's no excuse not to, put these things to work for you and things that people will need. So these are just some things worthwhile, but gold is literally the numero uno of things to really keep your eyes out for. And of course, get in when you can. So let me look at, I can't not talk about silver, because silver to me has more upside. And I mean more upside, I mean the gold to silver ratio. The gold to silver ratio will definitely come a lot closer than what it is now. So as of right now, let me see here. What is the gold to silver ratio? Do they got it on here? Let me see. I don't have it. But point in case is, it's going to come more into realistic range and out of the ground now, according to a lot of the mining space individuals, is 8-1, 10-1, a lot greater than 60, 70, 80-1. So right now, seeing the same type of movement in silver, like even with this recent slam down right here, they slammed it from $40 down to $40. So they slammed it to 41.13, but it went back to 40.21 mighty quick. And so this is a 43 cent. So literally just within this day here, from 40 to 41.40, that's $1 plus day right there. That's $1 plus trading day. And so from $50 trading days to 100 in gold, 50 to 100 in gold, to $1 to eventually $5 trading days in silver. And this, once again, these are all futures contracts from the Western Hemisphere, but it's actual physical metal out in the Eastern Hemisphere with the Shanghai Gold Exchange leading the way. So clearly we're in a reset. That's what it boils down to. So getting positioned as best you can will definitely help you more than it'll hurt you. And so that's kind of what I want to talk on a little bit. Just share my 2 cents, and looking forward to do more of these. So if you guys have enjoyed connecting and just, hearing my thoughts and analysis on what's happening, feel free to hit that thumbs up button. And if you haven't come across the channel for the first time and subscribe, definitely connect with me. I'm going to do more of these live streams so I connect with the community and let you know what I'm keeping my eye on, as well as share with you some, some of my research and whatnot in reference to some small, small cap type of opportunities, would be miners or other cryptos, because that's where, the most reward will be in finding low cap opportunities and riding the fiat wave. And for those who might be new, you never know, let me share with you some possible strategies. And so I want to make sure I remind people of other ways to get your weight up. So as you can see here, we got 1/4 grain, 24 karat gold. So if you can't get an ounce, you still can get some grains. And so I want to encourage people to check into those. And if you want to work with me directly, this here is located on my actual store page, where if you want to get involved, feel free to click link in the description, or you can, as you can see here, go and get you a 24 karat gold grain. It's at minigoldbars.com. Links in the description. Check that out. And then last, if you guys want to get a hold of the gold backs, aka gold notes, as you can see here, 24 karat gold will hold this purchasing power, will not be going to zero. You guys can get some of those. I got the whole little set, got a couple sets, but once again, bought these ever since I bought them. They've only gone up, priced in USD terms. So once again, absorbing all the liquidity that's coming. So if you want some of those, go to buygoldnotes.com. Links in the description. Other than that, just checking in. Looking forward to doing it more often, give you my thoughts, ideas, suggestions on what's happening, keep you in tune with market activity. And yeah, curious to hear what you guys think. If you found it enjoyable, hit that thumbs up on the way out, hit that bell, subscribe, and I'll catch you guys later. Peace.